Hi, welcome. It's Mary Ellen McGonagle with your Friday afternoon weekly Edge show. And then today we will, as usual, take a look at where the markets closed for the week. We're going to take a look at support, key areas of resistance, and beyond. We want to take a look beneath the broader market surface at those underlying sectors and industry group, as always on the lookout for potential rotation, areas that are beginning to possibly firm up. We'll get into that. And then, of course, some of the headline news from last week that drove price action. The markets were down, of course. The NASDAQ was actually flat, but we will take a look at all of that. And then viewer question of the week. And it's all about the concept of bottom fishing. We have so many stocks that are well off their peaks in price, and when you can tell that they are, in fact, reversed into a new uptrend. So here we are with that news from last week. We did see the price of oil continue to remain elevated. It did get up close to that $94 per barrel price before a pullback. We'll take a look at the energy group as well in response. Yields continue to remain elevated as well. That 10-year Treasury is now at a 4.6% level, and this is not good news, certainly for growth stocks. However, we are seeing some areas of growth showing signs of life. New home sales last week reported for August. There was a drop, and that's all about the rise in mortgage rates that is continuing to keep consumers away from purchasing new homes. Also, consumer confidence dropped to a 4-month low, and this is all about high inflation, having individuals pulling back on their spending. And we did get Q2 GDP data, and it shows that the economy is very sound. It grew 2.1% for that second quarter. Economists are looking for an even stronger period next week. So there is still hope for that concept of what's called a soft landing, where the economy continues to remain firm, and then at some point in time, inflation begins to recede. So that's what we're on the lookout for. We also did get a very important inflation data number today, and that is that personal consumption expenditures, CPE data. And it did come in quite high, but it was all about the increased price in gas as oil prices continue to climb. If you strip away that energy number as well as food, there was a softening in that CPE data, which is generally good news. We want to get inflation down so that in turn, those interest rates could continue or at least start to decline as well. So from here, let's go ahead and take a look at where did the markets close for the week. And here we are with the daily price chart of the S&P 500. And as you can see, we did have a bit of a choppy week. We began with a pullback that was somewhat recovered. The S&P 500 ended the week down more than 0.5%. But what we want to key in on here is the price relative to this 4,300 level, which is very widely watched as an area that we want the markets to not only potentially find support, but to trade above. And so we did close the week at 4,288, just below that 4,300 level. Now, we can see that it's been wobbling around that 4,300 level, and eventually we will be on the lookout for a continuation trade higher. This 10-day simple moving average is your first area of possible upside resistance. And as if we could move through and above that, we also want to see this RSI turn more positive, get up above that 50 level. We do see the stochastics faster moving momentum indicator in negative territory, and it is trending upward. Ideally, we want to get that above 50 as well. Let's go ahead and take a look at the NASDAQ. As mentioned, it did perform a bit better. It was flat for the week, and we can see this also has a key area of possible support on this pullback. The NASDAQ was able to close above that area of support, and we can see the RSI similar to the S&P trending upward, but we will also need to see it get up above 50, get these stochastics moving higher up above 50 as well before we could call a new uptrend. Moving along, taking a look at the underlying 11 sectors in the S&P 500, and this is a 2-month daily price chart view. I've added an RSI, and then these sectors are sorted in descending order. And up here at the forefront again this week is Energy XLE. We did get a pretty sharp pullback in energy today, which in turn puts this metric here with the RSI just on the cusp of that 50 level, ideally similar to prior pullbacks. We do want that RSI to remain up there in positive territory. We have the MACD remaining in positive territory as well. So when we use historical precedent on those pullbacks, as long as these momentum indicators remain in positive territory, we're generally in good standing. Another area up here at the forefront is communication services, a lot of internet related stocks. Google, or Alphabet, actually was up 0.5% today. That certainly is helping the group remain up here at the forefront. However, it is still below key areas of possible resistance. You also want to pay attention and be very aware of these weaker areas down in this lower quartile. And we can see that it is REIT stocks, staples, and utilities. And these names are continuing to come under selling pressure. We'll take a quick look at that staples sector, and you can see it's really fallen out of bed. And this is one area that I'm going to be sharing with you a couple of well-known stocks in the group, and all about when it is safe or certainly positive to get back in given the steep declines that they've experienced. So let's go ahead and take a look beyond these sectors at the sub-industry groupings. I have select ETFs that are really helpful as far as staying on top of price action. Again, more refined so you can get a sense of what is working or not. Up here at the forefront, the US dollar continuing to climb higher. This is generally not good for the broader markets, and particularly for those global multi-facing companies. A number of them are in the consumer staples area, and they are going to struggle simply because a higher dollar is going to reduce the value of their revenues from overseas. Also, we can see the yield on that 10-year treasury. I talked about it spiking up almost to 4.7. We settled about 4.6. And I'll go ahead and put up a weekly here because you'll want to note that the interest rate on this closely watched 10-year treasury bond is still at very elevated levels. And going back, taking a look at some of these other underlying ETFs, the volatility or fear index remains elevated. It closed at about 17.5. Anything above that 16 level is not constructive for the markets. So today's pullback did push that higher, certainly on the close for the day. Now, talked about technology and the NASDAQ's performance. Let's take a look at one of the reasons that the NASDAQ was able to trend and trade flat on the week. Here we are with semiconductor stocks, SOXX, and the group was up about 1.6%, and that's relative to negative areas elsewhere, beginning to firm up. And I will be talking about names here on my weekly MEM Edge report on Sunday, but for now, we can take a look at these momentum indicators that are giving signs of potentially, at the very least, firming up and in the very beginning stages of reversing their downtrend. Another area in tech is, of course, software stocks. They did not fare quite as well, but they were up less than 0.5%. Very similar dynamics, but again, not quite as strong. This is IGV, the tech software ETF, trending upward, still below that 50. And then likewise here with the MACD, definitely still has more work to do, but worth noting. So continuing on and sharing with you some of the weaker areas of the market. Those of you that follow gold may have felt this pullback this week. Among other reasons, that strong dollar is not good for gold stocks, and you can see that it is now GLD is in an oversold position with that RSI down below that 20 level, and that is not very usual, actual below the 30 level at 25. And you don't see that happen too often, so any type of potential rally attempt from here would have a bit more strength given that oversold position, but for now that downtrend is very firmly in place. Now, from here, I did talk about that concept of entering, or at least keeping your eye out on some of these names that have really been hit hard. This is Pepsi. PEP is the ticker symbol. You can see it hit a peak in price back here at 194, and it is now down at 169. What I'm going to do from here is add a 5-day simple moving average. That's a shorter term moving average, and you can see as a stock rallies, it acts as support when the stock gets going. Likewise, on this downside, that blue 5-day moving average is acting as upside resistance. So what we are going to keep an eye out for is characteristics of the downtrend reversal that took place in Pepsi earlier this year. And this is going to be helpful for you as it relates to potentially entering the stock if we do, at the very least, see a stemming of losses and then a downtrend reversal. First up, you will need to see the stock trade back above those moving averages. And in this case, it is that 5, 10, 21, and 50 day. And from there, we're also going to want to see that RSI and that MACD lift off into positive territory. And you can see the nice subsequent uptrend that took place from there. Also of note, you want to be aware of downtrend reversal attempts that fail and what would signal that for you. So let's go back to this late August period when we had this 1.5 week rally in Pepsi, and you can see it did begin to advance above these shorter term moving averages. However, we did not get into positive territory with that MACD, RSI. But as we move forward, we can see in early September, another rally attempt. This 50-day moving average is going to be the real line in the sand for the stock. But what I did want to point out to you is that despite the RSI turning positive, we did not get a confirming positive MACD above that net neutral zero. So be aware of these reversal attempts that falter and precisely why. Let's take a look at another name in the staples area, and we'll go ahead and use that same procedure. Here we are with Hershey Foods, SHY, a big winner back here going into this May period, but take a look, a very pronounced downtrend. A lot of this, of course, having to do with the price of chocolate, a main ingredient for the company, has really skyrocketed in the second half of this year. And what we can see is, again, these rally attempts. And I'm going to point out again so that we don't get trapped in thinking that given how much the stock has in fact declined, you would be on the lookout for the stock to return into an uptrend. So first up here is in June. That RSI never got into positive territory, likewise with that MACD, and then subsequent rally attempts very similar where your momentum signals are not in positive territory. Yes, we've been in an oversold position for some time, but history tells us that this could very easily continue, and at this point in time, not ready for prime time. Quickly going back to that reversal that took place earlier this year, and again, keying in on those metrics that signaled that, in fact, it was in a new uptrend. First up, of course, is a move above these moving averages, which in turn has these shorter term moving averages now trending upwards so that they can act as support. We also had that positive RSI take place. And then once that MACD got into positive territory following that bullish crossover, you now have your 3 signals in place. And in fact, the stock did enter a new uptrend. I'm going to leave it there. Everyone have a fantastic weekend. I'm going to look for you again here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.